Let's go to Nvidia first. It was down about 3.5% earlier. Now it's only down 1%. But there is some commentary out there this morning.
Yeah, and I would say Nvidia's had a rough couple of sessions now as we've seen it pull back about 15% from its all-time high, which isn't too shabby, but it's definitely something that's concerned, I think, a lot of the overall bullish thesis on the market, because obviously Nvidia has so much momentum. But Morgan Stanley raising its price target to $144 a share from $116 with an overweight rating following positive data from trips, they said, to Taiwan as well as China. And as a result, the firm is raising their calendar 2025 estimates and thinks data points from two of those trips and U.S. checks now still remain robust. However, they did add that it's clear that we are at the tail end of the hopper cycle and the frothiness and visibility is lower than it was. And given the enthusiasm they are hearing for Blackwell now is lower than it would have been. So, I mean, all in all, Street still very much loves this name. There's 58 analysts. There's 53 buys, 5 holds, no underperforms, no sells. I would respect an underperform at this point just to see some divergence from the trend, but analysts love this name, and there's a reason why. I mean, it's the second best performer in the S&P 500 this year so far, just behind Supermicro. But like in terms of the ads, I mean, like the value add we see on like a daily basis when Nvidia moves, it can add like literally hundreds of billions of dollars in market cap in a single session. We've seen that before.
Yeah, I mean, it's keeping the Nasdaq afloat right now as it repaired itself from down move. Well, I shouldn't frame it that way because it's still down, but it was down a good bit earlier, and now that it's come back, things have stabilized a bit.
The classic intraday recovery from Nvidia. I feel like where we open is never where we close.
Yeah.
Recently, Nvidia saw a slight boost after Morgan Stanley analysts raised their price target on the chipmaker's stock, thanks to the company's sales data showing unprecedented and robust demand for its current data center processors. And in the near future, the analysts expect Nvidia stock to reach new record-breaking heights, with a big chance of bringing back the company's title as the world's most valuable. In today's video, we're going to go answer 3 main questions. What did the Morgan Stanley analysts say exactly? What's the reason behind the new bullish price target? And what is next for Nvidia stock investors? So, don't miss out. But first, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
Yeah, software taking a bit of a hit. Joe, I'm going to come over to you. Just last word on chips. You have some pretty broad ownership. Broadcom and the GOT, also Qualcomm, NXP, list goes on.
The list goes on, and I think it's important to understand how significant the semi-trade is. The semi-trade is what the U.S. economy is all about. Chips are the new oil. Semiconductors are what drive the tape. Look at the performance today of the S&P. We're seeing a nice little recovery in the price for the S&P. What does it correlate with? It correlates with the fact that Nvidia came out below 119 early this morning. Now we're seeing progressively, as the day is unfolding, buying interest returning into Nvidia, Nvidia pressing towards its high. So if you're trying to understand the direction of markets, to me, everything begins with the semiconductor industry.
All right, SMH basically flat this morning, not moving too much right now.
Morgan Stanley analyst Joseph Moore has recently increased his earnings expectations for Nvidia, saying that the company will earn $3.34 per share on a GAAP basis and $3.53 per share on an adjusted basis. That's considerably higher than Nvidia's past estimates of $2.91 per share and $3.10 per share. This conclusion came as a result upon the analysts' channel checks in Taiwan and China, which showed a rapidly increasing, unrivaled demand for Nvidia's Hopper series products. Yet, Moore has raised some concerns regarding Nvidia's transition to the next-generation Blackwell series. He mentioned that it is clear that we are at the tail end of the Hopper cycle, so the frothiness and visibility is lower than it was. And given the enthusiasm that we are hearing for Blackwell, the analyst thinks that Nvidia faces a higher bar nowadays, especially after the sharp rise in the company's market cap since its last earnings report in May. Still, Moore added that Nvidia's supply ramp appears to be going well, though their contacts report that the exceptional complexity of Blackwell chips and racks can be a challenging ramp. On the other hand, Moore added that he's still impressed by the continuous demand for Nvidia's Hopper products, especially the H200 and H100 GPUs. But this high demand for Nvidia's products isn't at all surprising, as these GPUs are heavily deployed in generative AI and high-performance computing, peculiarly in data centers. Moreover, Moore expects the sales of these GPUs to keep thriving in China and Taiwan for a long time, and without any decline. So, what's Moore's price target for Nvidia stock? Let's find out. Hello everyone, and welcome back to Investocracy.
Let's talk about why you continue to see and be the bullish Dan Ives that you have been for quite some time.
Look, and it speaks to our view going into the year, and NASDAQ 20,000 is ultimately where I think we head. Tech stocks up another 15% because even though this has been led by Godfather of AI, Jensen, Nvidia, the multiplier for every dollar spent on Nvidia chip, $8 to $10 flowing through the rest of tech. Software, infrastructure, semis, and I think now consumer AI revolution with what's happened in Apple. In my opinion, it is 9 p.m. in the AI party that goes to 4 a.m. And I think this tech market, bull market's going to continue.
How long does it take to get to 4 a.m. though?
I think in our opinion, it's a 2-year tech bull market because I think the next phase, the second, third, fourth derivatives, it's about the use cases playing out. Of course, you see what's happening with Microsoft, the hyperscalers, Google, Amazon, but then next, it's going to be names like Palantir, MongoDB. I think what McDermott's doing at ServiceNow. You look at Oracle. If someone told you Dell was an AI name 6 months ago, they'd say there's no way. Look at it today. And I think it's a 1995 moment, not a 1999 moment. I think numbers go up significantly going into next year, and it speaks to our view where the bears will continue to yell in their caves about valuation with their spreadsheets, but I think this tech market continues to move higher.
Moore kept his overweight, or buy, rating on Nvidia stock, while correspondingly raising his price target to $144 per share from $116 while maintaining an overweight rating. This represents a solid 16% upside from Nvidia stock's current $124 price tag. What's even better is that this price target is even higher than Nvidia's all-time record of $140.76, which the company reached on June 20th. Joseph Moore also stated that the analysts at Morgan Stanley aren't pounding the table at these levels, given the sharp appreciation since the last earnings report. But this remains the most compelling narrative in the AI semis space, and as we transition from H100 to H200 and then Blackwell, visibility and backlog will improve materially. Basically, Moore is not necessarily suggesting going all in on Nvidia shares at the moment, taking into account its recent sharp rise, but he still believes that, undoubtedly, Nvidia still holds the top place in the AI semiconductors market. And as the company moves to new products and new technologies, its position will significantly improve as a result. Although the company has had an unreal rise in its market cap since its last earnings report in May, the firm's valuation has swelled by about $700 billion. Therefore, Moore still believes that the best is yet to come, and Nvidia is about to reach some new unparalleled heights. So, is Nvidia stock an exceptional buy now? Let's find out. But first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
This is more of a psychological reaction, Sherry, to how rapidly this company grew. I mean, this was a company that a few months ago most people had never even heard of, and then all of a sudden has the largest capitalization in the world. Still not quite there now, but the point is it's up there in the top 3, may take over the top again. That kind of a rise means a lot of people earned a lot of money very quickly, and I think a lot of people are kind of reacting to that and thinking, let's do some profit taking, take some while we can. Yeah, it'll probably grow, but you know what? It doesn't hurt to take some of that money now. So I really think that's what's going on, because the fundamental story of what NVIDIA is doing and the fundamental story around Gen AI and the thesis of investing in that technology has not changed. And as that report just said, if they generate, even if it's $250 billion in cash, I mean, it's a staggering amount of money, because orders. They're sold out for the next year. A lot of their suppliers are sold out for the next year. There's a lot of excitement around there. And what Jensen has done is he's built not just one, but arguably two different software platforms. He's got the CUDA software platform that developers are using, and now he has this enterprise AI software that we're starting to see companies use. He recently signed deals with HPE and Dell and Lenovo and Cisco and all these big enterprise hardware companies. And so that what's happening is a lot of big businesses around the world in every single industry, not just tech, they're making investments in Gen AI, but they want to do some of that work themselves, and they're going to use now the NVIDIA software. So that's yet another revenue source as NVIDIA starts to collect licenses on that software.
There's no denying that artificial intelligence is the current most important technology in the tech world, and every company out there is headed in this direction. Almost every company is trying to utilize artificial intelligence in its services, or at least in internal operations. And since Nvidia is the company that makes the chips that makes this possible, it's very likely that the company will still be able to expand its revenue in and market cap. Soaring demand for Nvidia's GPUs has seen its quarterly revenue and operating income climb 93% and 149% during the past 4 reported quarters. Meanwhile, free cash flow has soared 147%. So, at the end of the day, Nvidia is still a very good buy. And despite the huge success it has had up to this day, it still has not fulfilled its potential at all, bearing in mind that the AI technology still has a huge room for development. But what do you think about Nvidia's stock? Is it a buy at the current price? Let us know your thoughts in the comment section. And don't forget to tell us what your valuation for Nvidia is. If you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.